Buying a house is very exciting, but do you want to know what it's going to cost you? Hi, I'm David White with the Maverick team, and in this video, I'm going to walk you through what you can expect in closing costs as far as lender fees. When you know what the costs are going to be up front when purchasing a home, you can better budget for it and have fewer surprises. When you're buying real estate, just like anything else you're purchasing, there are going to be costs in order to complete that transaction. And we're going to break down what those expected costs are going to be. The first cost you can expect are title fees. These are fees charged by the title company in order to complete your transaction. One of the main fees that you'll see from the title company is called the owner's title policy. This fee is to protect you as the new owner from any potential liens that the previous owner had owned. It's kind of similar to a car title. On a home title, you want clean title. You want to make sure that you are the new owner of the property and that no one else can claim ownership to that house that you just purchased. Another closing cost fee that you can expect is the appraisal fee. The lender is going to get your property appraised before we fund the loan. The appraisal will give us the current market value of that property to make sure that you're not overpaying for a home. Another set of closing costs that you can expect are lender fees. These fees are what the lender charges in order to process your loan. These fees will include items like a processing fee, an underwriting fee, and even an application fee. These are typical standard fees that many lenders charge in order to process your loan and get it through the system to get you to closing. Another set of lender fees that you may or may not have are discount points. Discount points are your option to buy down the rate. As a certified mortgage advisor, I will walk you through your options to see if buying down your rate and paying a discount fee makes sense. Another set of fees are what we call third-party fees. These are fees that are not charged by the title company or by the lender, but we have to pay for them. These fees will include items like the flood certificate, the credit report, and in Texas, the attorney docs to prepare your loan closing. Another set of fees to understand are what we call your prepaid items. These are items to set up your escrow account and also pay for your homeowner's insurance for the first year once you close. Typically, as a buyer, you can expect to pay 3 months of property taxes and 3 additional months for homeowner's insurance in order to set up your escrow account. Knowing these closing cost fees up front will help you plan accordingly to save up the amount of money that you need in order to purchase your new home. But typically, the largest out-of-pocket expense for most home buyers is going to be your down payment. Your down payment is not a fee, but it's going to feel like it because it's going to be leaving your bank account. And one of the most common questions that we get asked all the time is how much money should I put down when I'm going to purchase my new home? And that is a very good question to be asking. As a certified mortgage loan officer, we will give you advice on what down payment you should put down. But do keep in mind that if you put less than 20% down, you will be charged a monthly fee as part of your monthly mortgage payment called private mortgage insurance. Private mortgage insurance is actually a charge that the lender charges you because you have less than 20% equity built into the house. Basically, it protects the lender in the case of a default and not enough money to recover the principal balance of the loan. One of my pieces of advice is, if you're going to put less than 20% down on the purchase of your new home, get an idea of what PMI is going to cost you on a monthly basis. So is PMI bad? Well, it's kind of neither. It's neither bad nor good. It really just depends on you as a homeowner on how much money you want to put down. And also, as a certified mortgage loan advisor, there may be options that putting 20% down is not the best decision for you. Maybe that money can work for you in other ways. So for example, if you're buying a $400,000 home, does it make sense to take $80,000 and tie it up in the house? There may be other options that you can use that money for. As a mortgage advisor, we will discuss with you the best options of that $80,000 and figuring out which option makes the most sense to meet your financial goals. So hopefully this video explains to you typical closing costs that you are going to see when purchasing a new home. And my advice to you is to always get an estimate of those fees before you start looking to purchase. So if you have any additional questions as what your closing costs would be, or if you would like to get an estimate of closing costs you can expect, reach out to our team today. And If you would like to take a new approach to exploring the right loan to help you purchase your new home, follow the instructions below in this video or give us a call. My name is David White with the Maverick team, and we're a different breed in mortgage lending.